Gonna get my lighting right. Welcome, welcome. I'm going to wait about 1 to 2 minutes and then we'll get started for tonight. How's everybody doing? Where are you from? What's going on? Let's talk for a second. So what's going on? How's everyone doing? If you can let me know in the chat. Where are you from? Let me know where you're from. If you want to know about making some money in tax saving strategies, type yes in the chat. That's YESSS, yes. I'll start it off. I'll kick off the yes. That's my favorite. Atlanta, hey Kenya, thank you. Hey, welcome Atlanta. I love Atlanta. I love Atlanta, and it's where all the, I'll say, Black millionaires are right now. So that's so awesome. Thank you so much for joining me. Welcome, welcome. Type yes in the chat if you want to know about some tax strategies. I actually have been ill for like the last week. Hey, Chi-Town, Val Jones, hey, yes, yes. I actually have been ill for the last week, so I had to make myself get on this webinar tonight because I had like a little sty in my eye. But guess what? The show must go on. And this thing will go away, and it's not about to prevent me from sharing these valuable nuggets with you guys. I'm so super excited. I have a polling question. So let's go to question number 1, because I kind of want to get started on time. So question number 1, how long have you been in business? So let me know, how long have you been in business? All right, 5 to 10 years, okay. So we have some seasoned entrepreneurs on the chat. That's awesome. That's really awesome. Okay. 6 years is awesome. 6 years is awesome. That's kind of where the pivot really starts happening. And I don't know if you made it to the first 6 figures, but definitely you start figuring the business out and you're able to scale it. So that's really awesome. And then you've made it through the first 5 years. So that's even more awesome. So congratulations to that. 6 years is amazing. Okay, so I'm going to get started with my slide deck. I have a lot of nuggets to share tonight, so I'm so super excited. Thank you so much for joining me. I sincerely appreciate it. Let me get started. Slide. Present. Okay. All right. So tonight we're going to talk about 7 tax strategies to save millions on taxes, but actually thousands. It's 7 tax strategies to save you thousands of dollars on your taxes. And hopefully we talk about the mindset to make millions. My name is Deanna Grant. I am the owner of a tax and accounting firm named Grant's Financial Services, and Deanna Grant, AKA Tax Boss Lady. Okay, I just wanted to start with my mission, and this is why I will be doing way more trainings, despite, like I said, sick or not sick, sty or no sty. I'm gonna keep going. So, like I said, my name is Deanna Grant. I'm CEO of Grant's Financial Services. I've been in business for 10 years, but sincerely, my mission is to empower and educate women entrepreneurs and people of color to get to their first million in revenue so they can make a difference in their lives, their businesses, and create family generational wealth and uplift our own communities. It's time for us to take our dollar, and we are the ones that are the recipients of the wealth in our communities. But it starts with just having some really good business practices. And of course, we do not want to give all our money to the IRS. So we're going to get into it. We're going to get into that. Who am I? I'm the owner of a multiple 6-figure tax business, and I've been in business for 10 years. So it's taken me 10 years, and I've actually figured out some of the secrets to get to 7 figures. And I'm starting to work with entrepreneurs a little bit more closely. So I'm super excited, but I'm a business financial coach. I'm a speaker on tax topics, cash flow management, wealth building, financial literacy for underserved communities. And I work with 6 to 7 figure business owners, and I help them save an average of 10 to 30K in taxes. And like I said, we're going to go over those 7 tax strategies. I'm super excited. I've been working exclusively. What sets me apart from other accountants, CPAs, EAs, etc. What sets me apart is that from the beginning of my accounting career, I have exclusively worked with actually Black entrepreneurs. So my first job, I got my degree in accounting from Purdue University. My first job was at a Black-owned accounting firm in Chicago, in the Chicagoland area, and we worked with the upper echelon of the echelon. So I have the story to tell and share that Black people do make money. Black people do have successful businesses. I've worked with businesses from their first, like I said, first 6 figures to multiple 7 figures, like 10 million. I had one company that scaled to 30 million. And personally, I prepared over 10,000 tax returns, individual and business, in my career. So it's a lot of taxes. I'm also a mother. I'm a divorcee, and I am an entrepreneur. So these are the pictures of me. That's my lovely little lady who I'm trying to instill how to boss up. I'm trying to train her how to be the next leader in our world. But my story is, I started my business because 3 things happened to me all within the same, actually, month. So I lost my job. I was at an accounting firm. I actually was at a Jewish-owned CPA firm, and then I got laid off from my job. Then within the next week, my husband left the house. So then my husband left the house. I got laid off from my job. And then the last thing that happened is my father passed away. So everything that brought me security in my life, a marriage, a job, a parent, everything that brought me security was gone within a second. And so then basically I was like, I have nothing else to lose. I've lost everything I could imagine losing, and within the same month, I'm going to start a business. And that's how Grant's Financial Services got started. So that's my office on 20th and Wabash. However, we support entrepreneurs in all 50 states. Okay, so let's get into the 7 tax strategies of the 1%ers that will save you thousands. And I want to start off with my quote: fail to plan, plan to fail. I just want you to remember that. Fail to plan, plan to fail, because part of a successful tax strategy is actually within the planning. It all comes to planning. Okay, so today we're going to cover choice of entity. I always go over that over every presentation I'm in, because I find that a lot of entrepreneurs do not understand their different types of entity. They don't understand. I always ask, like, well, what type of business are you? Are you an S Corp, a C Corp, an LLC? And a lot of business owners are unclear about that choice of entity. We're going to talk about the 7 tax strategies, save you thousands. I'm actually going to do an actual case study of how I save someone 30 to 40K in taxes. I'm going to show you what that looks like. I'm super excited. I'm going to show you how to keep the IRS out of your business. You don't want them to be all nosy in your business. And I'm going to remind you that loyalty does not save you tax dollars. Let's get into it. I'm super excited. Okay, what is a business entity? Well, this is when you incorporate. So basically, your choice of entity, honestly, that's a tax strategy in itself. So the taxes you pay depends on how you set up your business. So let's talk about the different types. There is a sole proprietor. There is an LLC. And if your LLC does not have any other members, you are a single member LLC. Then there's this S Corp. We all talk about the S Corp. I think I got to do a special webinar just about S Corps, because everyone's always curious about S Corps, and then you hear about it, but you don't understand it. But S Corp is a type of, it's a status. Actually, S Corp is a tax status. Then there's the partnership tax return. That typically is an LLC with 2 or more people. And then there's the corporate tax return, the C Corp. Okay, and then I want to remind you, these are the tax forms. A lot of business owners don't understand. If you're a sole proprietor, you report your business activity on your 1040. If you are a single member LLC, this is an LLC with no other partners, you report your taxes on your form 1040. If you're an S Corp, you file a separate business tax return, form 1120S. If you're a partnership, it's form 1065. If you are a corporation, it's form 1120. I have a story. There was a business owner. Actually, this business owner is quite successful now in the Chicagoland area. But as the person was scaling to their success, they had a tax preparer that they had prior to their business starting. So they had this tax preparer, and honestly, a lot of preparers that are not business accountants or business tax accountants, meaning their whole like my practice, we almost exclusively deal with entrepreneurs at this point. I'm so super excited. But they're a tax preparer, meaning they do 1040 taxes, but they don't really do business tax returns. And that is a whole other area of discipline that's different. But long story short, back to the story, they processed her taxes on her 1040 form. So they put her business on the 1040 form because they didn't know better, but the person was a C Corp. So of course, we had to like amend and et cetera, et cetera. But it's very important that you understand what type of entity that you are, because one, you don't want to file your taxes late with the IRS, and you need to understand it. So I just want to remind everyone. There are levels to this. So when we talk about tax strategy, each entity type gives us different types of tax savings. So we have the sole proprietor. So I like sole proprietors because if you don't have to wait to start your business, you don't got to incorporate, you just need to get going. You need to just go and sell to somebody, find a service that someone's willing to pay for that you can, and then you will make some money. So you don't have to incorporate. You can start your business today, tomorrow. Don't delay it. You can get started. So you can start off as a sole proprietor. But then what I recommend for everyone, if you have not incorporated, I recommend that you become an LLC, because with an LLC, I can transition you into any type of entity, meaning you could stay being taxed as a sole proprietor. I can have you taxed as an S Corp, and I also can have you taxed as a C Corp. But all of that depends, there's strategy. Depending on the tax code and what year it is, I may find that with your level of business, your $500,000 of income and et cetera, that we should make you a C Corp. Or guess what? The $1 million strategy is multiple entity strategy. That means an LLC, an S Corp, and a C Corp. Or I like C Corp, LLC, not for profit. I feel like it's a triangle. It is the wealth building formula, because we are shifting income to different entities so that we can create wealth and save taxes. But those are, so I'm going over the choice of entity. Now, I have another polling question. I want to get to my polling question. Where is it? Okay, so stop my share. Go to polling question number 2. Okay, so I'm gonna share those results. So we have some people that are 5 or less years in business, and then we have 5 to 10 years. Okay, now go to polling question. All right, poll question number 2. Here we go. Do you understand the S Corp tax strategy? Oh, I have some people say yes, that's good. Okay, I got a couple of no's, couple of yes, couple of no's, couple of yes. Okay, so when we get off of this video, you will understand the S Corp tax strategy. It actually is a tax saving strategy. And I am going to show you on our case study how you can save thousands in taxes utilizing the S Corp tax strategy. Okay, so that's good to know that some people understand it, some don't. So we're going to go back to the slide deck. All right, this guy. So there goes Trump. And you know, we've heard this story that he only owed $750 in taxes. But I kind of want to say there's like a lot of hearsay surrounding this whole story. But as you see, like he had $7 million in basically in income, but then he had tax credits. He has some general business tax credits. There are over, I want to say 50, it may be more, general business tax credits. And these tax credits a tax credit is a dollar for dollar reduction in your taxes. And there are certain tax credits because the government gives business owners tax credits because business owners are the ones that employ other people. So then, but you have to know about these general business tax credits. And the thing about Trump is he has a team of advisors. So he has probably accountant, CPA, he probably has a financial accountant, he probably has a tax accountant, a U.S. tax accountant, he probably has an international he probably has an international tax accountant. And long story short, and then sometimes probably their whole accounting department and team meets on all the various entities. But Trump is not DIYing for this kind of success. He is not sitting there doing his own taxes, doing his own accounting, this kind of results. So I just want to, but how did he pay $750? Well, he utilized general business tax credits. I want to show this notice. I've seen this more likely than not. I hate to see this. This is a CP 2000 notice. This is a tax notice from the IRS sent to one of my lovely clients that decided to DIY their incorporation as well as DIY their own bookkeeping. So I see a lot of horror stories. This person owes the IRS $24,523. Now, of course, I'm gonna call myself tax boss lady. I was able to rectify the situation because what happened is they had a merchant service, like a Square account, and they also had a C Corp business. So when they first started their business, they started their Square account with their Social Security number. So Square, especially when you make over 20K, Square starts reporting that income to the IRS, Form 1099K. Well, the person reported the income on the C Corp. However, because they never went back and changed their Social Security number to an EIN number with Square thought that they made $100 and something thousand. And so Square sent that note to the IRS, and then the IRS sent my client this lovely love note. And I want to say, I see this story more likely than not. I got a couple of horror stories I got a couple of 20K tax stories for basic individual, meaning from people that make under $50,000 and they just have gone to the wrong professional and now they owe the IRS because they just did not go to the person qualified to help them find a solution for their taxes. But that's what happened in that story. So there we go to how do we save thousands in taxes? So that was an example of saving thousands in taxes. After I amended that person's tax return, they owed $0. So it was $24,000 owed to $24,000 not owed, no balance due. $24,000 balance due to when after I fixed it, $0 due. So the net effect, $24,000 tax savings. Awesome. So today, now we're going to go through our 7 tax strategies. So here are the tax strategies. Tax strategy number 1, tax deductions. What is a tax deduction? A tax deduction is, you've heard of the different types of tax deductions. So there's like the home office tax deduction, there's travel, there's writing off your car, there are your cost of goods sold, there's your office equipment, there's not equipment, but office supplies, there are paying your contractors, paying your employees. So a tax deduction basically is, I want to say, a write-off or an expense. So it's a way to reduce your income. And strategy number 1 is to actually know the eligible tax deductions you should have. That's strategy number 1. I have another story, but I'm going to save it to the end. Okay, tax credit. Tax strategy number 2, tax credits. A tax credit is a dollar for dollar write-off of the tax. So this tax credit reduces your tax to 0. So remember our little Trump story? Well, he had some general business tax credits. A tax credit, so say your tax that you owe is $20,000. A tax credit will reduce your taxes dollar for dollar. So if you get $5,000 of tax credit, if you owe $20,000 in taxes and you have $5,000 of tax credits, you now will owe $15,000 because a tax credit reduces your tax dollar for dollar. Some examples of tax credit, there are some education tax credits. There is earned income tax credit. We've all the earned income tax credit. That's if you have children and you're in a lower income, it reduces your tax dollar for dollar. And actually the earned income tax credit is a refundable tax credit. So it gives you money back. That's an awesome one. There is the work opportunity tax credit. If you own a business, there is something called the work opportunity tax. That's where you hire employees that live in a lower, I want to say a lower economic status. They live in a lower economic neighborhood. They live in a neighborhood that is a little poorer or considered poorer per the IRS standard, and you can get some eligible tax credit. There are empowerment zone tax credits. And if you Google this, general tax credits, if you Google form 3800, if you Google form 3800, 3800, IRS form 3800, you will see all of the general business tax credits. This is one of those secrets of the one percenters. The one percenters utilize these tax credits to save them money. Because what did I say? A tax credit writes off your taxes dollar for dollar. All right, so I'm gonna look at the chat for a second. Yes, okay, get all the tax credits. Thank you, Kenya. Yes, we're gonna get all of the tax credits, but getting the tax credits is part of the strategy, and that's why you need to actually utilize the professional. The professional knows, the professional that you want to use and you want to work with, they actually are familiar with the tax credits. Hey, that actually is a trick. If your preparer that you have now, you need to ask them, hey, do you know about any of these business tax credits? And if they can't list any of them off for you, you need to understand loyalty does not save you tax dollars. So being loyal to someone who cannot service your needs right now and cannot save you tax dollars, actually make you pay more, and that's the story I have for you at the end, then it's not worth it. It is not worth it. So loyalty going to the same person that worked with you prior to you starting your business, it's just not worth it anymore. You need to work with the right professional for your level of business. Strategy number 3, shifting income strategy. Okay, so I know you guys have heard about hiring your children. So, and the S Corp, and now we're going to get into an example about the S Corp, but hiring your children and the S Corp. So when you hire your children, what happens is you are able to take income from, just say you are a person that makes $100,000 and your tax bracket is 25%. When you hire your children in your small business, you are able to take income from a 25% tax bracket, which is your tax bracket, and move it down basically to a 0% tax bracket. And if you pay your children, the standard deduction is $12,200. If you pay your child $12,200 or less or more, we could actually play with this number a little bit. We may, depending on the age of the child, we may be able to pay them $15,000 a year. We could play with this because at the end of the day, when a child makes $12,200, they actually are at a 0% tax bracket and they pay no taxes, 0 taxes on it. So that is an awesome tax strategy, and that right there saves you thousands. How does it save you thousands? I'm gonna get a little technical with you. If you have a $12,200 tax deduction and you're in, I got to do round numbers, and you're in a 20% tax bracket, well, you take 12,000, I'm gonna multiply by 10%. So that's $1,200, 20% will be $2,400. So a $12,000 tax deduction, meaning I pay my child $12,000 of income and I get to write it off from my business. That essentially saves me $2,400 in taxes by implementing that strategy. But you have to know how to protect your return from the IRS. It's all about the paperwork that you utilize for these strategies. So there's hiring your child, then there's the S Corp tax strategy. So the S Corp, what happens is we eliminate some of the FICA Medicare tax that we would pay on our earnings. And that is how we are shifting income to a lower tax bracket. We're eliminating some of the FICA Medicare tax by utilizing the S Corp tax strategy. Strategy number 4, retirement deductions. There are a lot of retirement deductions, and this is part of the wealth building formula. I'm all about our people, us, women, and our people creating wealth. And part of creating wealth is not spending it all. And what greater way to not spend it all and put money away for a rainy day, and you get a tax write-off. So retirement deductions is a tax strategy that will reduce your taxable income. So we can subtract the retirement deduction away from our income that we earn, which allows us to save tax dollars. So some of the retirement deductions you could have include solo 401k, SEP IRAs, self-directed IRAs. I love the self-directed IRA, especially if you're in real estate, because with the self-directed IRA, instead of you putting money in the stock market, you actually put money into a fund, and this fund is self-directed, meaning you could invest in things that you want to invest in, not in Walmart, Target, or whatever big corporation. You could actually invest in a real estate project of your own, but you got to follow the rules. But the self-directed IRA is a pretty good tool. Then there's pensions. So you're making multiple 6 figures, multiple 7 figures. Then we would get an actuary to actually, we get an actuary type firm, and they calculate based off of your age and blah, 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 what actuaries do. And then they come up with a pension plan. And typically this is a huge deduction for yourself, your key employees, and or even your regular employees. But that pension plan is something that you would want to implement. One, you can keep your key employees. This is when you are past the 6 figures and you are like multiple 6 figures, 7 figures, and now you have a team and you have employees that you want to keep your talent in-house, and now you want to fund them just like when they used to work at PwC, or where they used to work for Target Corporation, or whatever business they used to work for. They used to have like a retirement plan working for that business, so then you could actually have the same thing. And when you are creating wealth and you are intentional and just growing your business, you will need some retirement deductions, because that's part of our tax strategy. Tax strategy number 5 is tax elimination. There's a couple of tax elimination strategies. Elimination strategies eliminate the tax. I'll explain one. One is where we use life insurance product to eliminate tax. So what that means is we actually can have a life insurance retirement plan. So we'll place dollars in a life insurance policy. There's a strategy called overfunding of insurance. So then we purchase the life insurance plan, probably a whole life, purchase it. Our business is able to get a tax deduction, but the tax elimination is where when the money is in the insurance policy, it actually grows, just like on the stock market, it grows within that insurance policy. And any dollars that you're making off of that insurance transaction is, you pay no taxes on it. You pay no taxes. So you found a way to eliminate the tax. Now, how do you get the money? You have to borrow it. So it's a strategy. It's actually how Donald Trump is able to just leverage his whole life. He takes his real estate, probably purchases the real estate, probably through whatever kind of fancy financing. Through his fancy financing, I don't want to say rehab, but he refinances. Sorry, I couldn't think of the word. Donald Trump refinances on his real estate deal. And whenever you refinance, all you're doing is using a loan product. So you get the loan, you pull the money out, and you're liquid. So now you have cash to go do something else with, but that is a tax elimination strategy. You're not paying taxes. You got $500K because you refinanced your rental property, you pull the cash out, and you are able to spend that money, but you don't pay taxes because it's via a loan. Kind of similar to the life insurance policy. Life insurance is also awesome because when it's paid to your heirs, as we're talking about wealth building, they don't pay taxes on life insurance. So if you don't have life insurance, please go get life insurance today, because it's the easiest and fastest way for us to pass wealth down to the next generation, to your niece, nephew, daughter, whoever it is, leave something for somebody so that we can start creating wealth for ourselves. All right, so that's strategy number 5. Strategy number 6, having a financial management system. I want to say this is so important. A lot of entrepreneurs, they have these spreadsheets, and once you know that you want to make 6 figures, multiple 6 figures, I believe you should eliminate the spreadsheet strategy. Why? Because when it's time to do tax planning, and when I ask you, well, what is your income year to date? What are your expenses year to date? And you're kind of like, and you don't have an answer for me. How can we do tax strategies? How do I know how much, when my tax strategy surrounds the amount of income that you made? If I don't know how much income you made year to date, how can I do a tax strategy? But if you're in business to make money and you don't know how much money, your income, your profit on a month-to-month basis, that's not good. So a business owner should invest in a financial management system. What does that mean? You can DIY QuickBooks if you want, but I would suggest, if you're really trying to scale 6 figures, multiple 6 figures, that you get a bookkeeper, that you utilize a bookkeeping business or someone that does bookkeeping. Our office does bookkeeping, but that's not our focus. But we do bookkeeping, especially for our tax clients, because that's also how I protect the tax returns from the IRS. Because when I do bookkeeping, I know every single transaction. And I'm not missing any dollars. When you don't have a financial management system, there are some expenses that you will miss because you didn't keep the receipt or you don't know what's going on. So financial management system is very important to tax strategy. So strategy number 7, okay, hire the right tax professional. Now we can get to some of my stories. I have a story, I got 2 stories. So one, basically, loyalty doesn't pay you tax dollars. So my client, it actually was a husband-wife client, and they actually filed married filing separately. There's nothing wrong with that. And also, don't let your friends tell you, married filing jointly, married filing separately. That's not the right choice. Guess what? It depends. It really depends on where you are, what your income is, what the W-2 is, what all is going, what the business income is. Everything depends. So the strategy in hiring the right tax professional is so that they know the tax laws and they actually can implement the tax laws for your benefit. But back to the story on how I saved the lady. I saved her $4,000. I saved her husband $7,000. What did I do? All I did was I looked at the sloppy work that the guy before me had did. So long story short, for her, because I know the tax rules, what happened is I know the preparer, all he did was put the W-2 in. The lady only had a W-2. Now we all like to use TurboTax or whatever it is. She had a W-2, but if you don't know the tax rules, even someone just having a W-2, that can go the wrong way. So the tax preparer she had put the W-2 in. Well, with tax law, you could either itemize or you can use standard deduction, whichever one is greater. For some reason, the computer defaults to itemize. So the computer defaults to itemize. But in the years when I reviewed her return, the standard deduction was higher. However, as a professional, I know the tax rules. So I'm not depending on TurboTax to tell me what the right answer is. I'm not depending on the computer to tell me what the right answer is. I have researched and I know the tax laws. So anyways, once I looked at her return, I said, oh, she needs to use a standard deduction. And I looked at it right away. And she is going to get back about $4,000 because it was a 16, 17, 18. Then her husband, whoever it was, they did not include depreciation for the person's rental property. Once I amended his return, this gave him about $7K on his personal, and then he got about $1,500 from the state. So what I said was, loyalty does not save you tax dollars. You need to go to the right tax professional for your situation. And that is tax strategy number 7. Okay, now I got another polling question. Go to my third polling question. All right, so we have some people that understand the S Corp strategy. Some people don't. No problem. All right. Thank you, Kenya. Absolutely. That is absolutely correct. Okay, so I'm going to share the results. All right, so we have 40% that said yes, they do, but then we had 60% said no, they don't understand the S Corp strategy. Well, so next is our case study on S Corp strategy, so you will understand it today. If you didn't understand it before, you're going to understand it today. So I'm super excited. I'm going to get to my third polling question. Okay. Do you feel that your current accountant is providing sufficient solutions and strategies to create tax? Oh no, I see no. Okay, that's a problem, guys. So we can work through that, but now we're about to go to the case study because I'm about to shock and awe you with how does a tax accountant do tax planning and tax strategy? What does that look like? Okay, so let's go to that. Let's go back to the slide deck. Okay, so I just have to say this about taking advice from friends. Why? If your friend is not a CPA, EA, tax accountant, whatever, business accountant, now sometimes depending on the level of business your friend is in, so if your friend has like $1 million business and you have a $750,000 business, you guys could probably talk because I'm pretty sure they've gone through some situations that you have not gone through yet, and that's okay. However, they're not the tax professional, but you can bounce ideas off of them. But I see a lot of people taking advice from friends that don't even have businesses. And I don't know why that happens, but I just wouldn't take advice from my friends. I actually would seek the professional. Okay, so we're about to go through a case study. And I'm going to show you, like I said, the secrets of the 1%ers and some of the strategies that help you to save thousands. That includes an accountable plan, an S Corp, the S Corp tax strategy, hiring your children, retirement plans, and insurance, wealth building. Those are when you talk about tax planning and how do we save clients dollars. These are the strategies that we utilize. And I'm pretty sure you haven't, it's not common knowledge. I'm pretty sure you may not have heard of all of these strategies. So that's why working with the right tax professional, it's very important. It's key and essential. And any of these strategies that I'm listed, you can write them down, jot them down. If you have someone, I hope that you give me a chance. However, if you've been working with someone for a long time and they are, across on board, you may want to introduce these strategies to them. But really, when you're growing your business and you're trying to save wealth, you really should be with someone who's proactive. You need a proactive tax accountant that knows the tax laws, that knows the tax codes, and that knows how to save you money. That's what you're going to need. All right, so let's go over a case study. So right now we're going to see, I'm going to show you how the S Corp works. How do you save someone 10 to 30K in taxes? That's not just on my Instagram as Tax Boss Lady. This is the truth. Okay, let's go through this case study. Okay, so let me get to that, the case study. All right, here we go. Okay. So this strategy works really well if you are a single member LLC or a sole proprietorship, and just say you have 6 figures of income, which is awesome. Now I'm going to play with the numbers so that you can see how much someone saves utilizing the S Corp tax strategy. So the S Corp tax strategy, what happens is with the S Corp tax strategy, when we are a sole proprietor or a single member LLC, meaning we report our business income on our Form 1040 Schedule C, then there is something called self-employment tax. Self-employment tax is, if you remember your W-2, on your W-2, there was FICA and Medicare. So self-employment tax is FICA and Medicare, but times 2. So FICA is 6.2% of your payroll. Medicare is 1.45%. When you are self-employed, you pay 15.3% in self-employment tax, plus you pay ordinary income. So in some cases, if you make 100,000, your ordinary tax rate may be 20%, and then your self-employment tax rate is 15.3. So you may end up paying 35.3% for every dollar you're making in taxes. And that is why the S Corp tax strategy is a really good strategy, because what you can do is save on that self-employment tax. Let's get into the example. Let me show you how this works. Okay, so I'm gonna change this number just so you can see how it like changes. So if you made 50,000 in earnings, right? Then if you were a sole proprietor or single member LLC, your self-employment tax, remember we were talking about self-employment tax, that's the FICA Medicare, it would be $7,650. And so that's how much you would pay. Now, if you were a S Corp, if I transition your business to an S Corp, instead of you paying $7,650, what can happen in an S Corp is I can choose to pay the FICA Medicare on a smaller amount of money. So, for example, salary is that W-2. So salary means W-2. That's what salary means. As an entrepreneur, you pay yourself a salary of $40,000, and then you have $10,000 that just flows through. So essentially, by utilizing this, the S Corp strategy has saved us $1,530. And what I would do is, with an S Corp, you're supposed to use reasonable compensation. So if my earnings for the year was 50K, I probably would pay myself a W-2 of 25,000, and then have 25,000 be a flow through. So then you would save $3,825. That's thousands right there. So just by someone changing your company to an S Corp, you are saving thousands. Now, Ade, I'm going to get to you in 1 second. I'm going to finish this example, and then we're going to have Q&A, and I'm going to answer all the questions. Okay, so I like 6 figures of income. So just say you made yourself $100,000. And reasonable compensation for what you do, I'm going to say it's $40,000. So with the S Corp strategy, if you would pay FICA and Medicare on $40,000. So if you had a sole proprietor, single member LLC, and you had a profit of $100,000, you would pay $15,300 in self-employment tax. However, with the S Corp strategy, we could actually decide to utilize, I'm going to do a W-2. I'm going to say reasonable compensation is $50,000, and then I'm going to have net earnings of $50,000. So me utilizing the S Corp strategy, so taking your business from a single member LLC and converting you to an S Corp automatically saves you $7,650. And within 3 years, that is $22,950. Now, let's talk about some of those other tax strategies I was talking about. Let's see if we pay our child. So we have a child, I'm gonna say age 7 to 17, and I'm going to now pay my child $12,000. And guess what? That's also a strategy, because if I'm paying for my child's after school, I know it's COVID, but if I pay for my child's after school care, if I'm paying for my child's the Switch, Nintendo, whatever it is I'm on, if I'm paying for my child's dance classes, I'm paying for my child's tutoring, I'm paying for my child actually high school tutoring education. If I'm doing that, I could actually pay my child for my business, have that money be deposited in my child's account, and have that money be deposited. Can you hold me, excuse me for 1 second? I actually, because I had a bobo on my eye, I decided to do this from home, sorry. Okay, so actually can pay my child $12,200, which I told you the business gets a deduction, but the child pays 0 taxes. I feel like for $100,000, you're at a 25% tax bracket. So by paying my child $12,200, my tax rate is 25%, we just incurred an additional $3,000 of tax savings. Now, an accountable plan kind of is like a home office accountable plan in summation. I'm not going to do too much of a deep dive into it, but an accountable plan is with your S Corp, it's where you have expenses that are personal in nature, but then you write them off on your business. For example, we're in COVID, home office. So having a home office, instead of paying office rent, you need to institute an accountable plan in your business. You calculate square footage, your total rent for the year, total mortgage interest for the year, total real estate taxes. It's pretty complicated transaction, but we offer accountable plan support and services. But long story short, it's similar to home office, and you're able to deduct your rent or a portion of your rent or mortgage from your business. So just say the calculation for our home office is $600 a month. And so then that equals $5,000. So we just found another $5,000 deduction. So I want to do a self-employed IRA. I'm going to put $10,000 to the self-employed IRA. And then I'm not even going to mess with the key man life insurance or the overfunding of insurance. We may not do that today, overfunding of insurance. But long story short, and if you got 2 children, you actually could pay, I'm gonna say child number two, you can pay child number 2, just say we pay child number 2 $5,000. Guess what? So now tax planning is where you meet with me at the end of the year. I need to know what your earnings are. I really pray that you have a bookkeeping team. You utilize Grant Financial Services for your accounting, but you need to have current books and records for the end of the year, because your relationship as a business owner, your relationship with your tax accountant, it is no longer once a year. It's twice a year, and I need to meet with you before the end of the year so that we can talk about, because these strategies, when you implement them in order to protect your return from the IRS, you have to have the valid paperwork. So if you don't have the valid paperwork, then having the strategy does not work. And you've got to implement the strategy correctly, because you do not want to get audited. But long story short, we pay our child number 1 $12,000. We have an accountable plan, which I said is like a home office. It's kind of like your rent, your home rent or mortgage payment, and we find a way to deduct a percentage of it. We have a retirement plan. We put $10,000 to the retirement plan. Then we pay it. Child number 2, it could even be a niece or nephew. However, a niece and nephew, when you pay a niece or nephew, you actually cannot utilize the same tax savings strategy. You have to actually pay them payroll. So it works well when it's your own child. The IRS has rules for when it's your own child that you get these savings. It could also be a parent. You can also have money payable to a parent. Like some of us have elderly parents that we take care of, not the elderly parent that has like $50,000 of retirement money coming in annually, but those elderly parents that you're sincerely taking care of, you could actually pay your parent too. You could pay your parent business money. But long story short, so just say just by talking to me, we found 37,200 of additional deductions. And then if you're in a 25% tax bracket, that has saved you $9,300. And then if you were not a S Corp, we also made you an S Corp. So your total savings is $16,950 with a tax planning session. In 3 years, that's $50,850, and that's where we're at. Okay, so that's how the S Corp strategy works. Now I'm actually gonna stop the share, and I'm gonna take questions in the chat. Book your appointment. Okay, Kenya. Now I see some people raising their hands. Look, you all, let's see. Open questions. I don't see any questions here. If you want to put questions in the chat, you can go ahead and type any questions that you have, because I am open now for Q&A. I can answer any questions you may have for Q&A, because I saw a couple people raising their hands. So I want to make sure I answer any questions. I'm available to answer questions. If not, I'll continue with, I have just like 2 or 3 more slides and then I'm done. But yeah, if you have any questions, please. Oh, what do I mean by flow through? Okay, thank you. I think it's Ade. Flow through. Okay, so an S Corp is a flow through entity. What does that mean? That means that any income or expense from your business, it actually is reported on a form. It's a K-1 form, right? So when I do your business tax return with an S Corp, if you had a profit of $10,000, because it's a flow through entity, your business does not pay taxes on a federal level with an S Corp. So what happens is that $10,000 is then transferred to your personal tax return on a form called a K-1. So we use a K-1 form, and that income is transferred to your personal tax return. So when I have a 1120S and S Corp tax return, you actually do not, no matter if your profit was 10,000, 50,000, 100,000, you do not pay taxes on that profit in your S Corp, because the S Corp strategy is where that profit is transferred to your 1040 tax return via a K-1 form whenever you have a S Corp. So I hope I explained that right. Okay. Now, how do we consider liability versus tax planning for entity types? Okay. So how do you consider liability versus tax planning? The tax planning actually is an assessment and a way to do strategy so that we can consider the liability for all the different entity types. So when we do tax planning, we need to look at what your current situation is, and that includes everything. Actually, my tax planning session, it starts with understanding, I need your financial, if you have a business, I need your financial statement updated. It has to be updated. I would like for it to be updated. If you need help and support, I can help you get it updated. But the point is, when I get your numbers, I look at your W-2, I look at your wife's W-2, I look at what the business has made, and based off of those numbers, because I'm a tax professional, I will then tell you, you made $250,000 for this type of income, then I'm going to tell you that I think that we should have an S Corp and a C Corp. We should actually have 2 entities. We have $250,000 of income. I'm going to recommend that we have an S Corp and a C Corp. This is just an example. So because we want to transfer money between the different entities to save taxes. So with a C Corp currently, and your C Corp could act as a family management company, I also could have your LLC act as a family management company. But based off of all the numbers, I would make an assessment. That's why you have to use a tax professional that does tax planning and strategy. So we will go through the different scenarios. We'll say, well, if you're a C Corp, this is how much you'll pay in taxes. If you're an S Corp, this is how much you'll pay in taxes. Guess what? If you have an S Corp and a C Corp, we're going to take 50,000, put it here, 50,000, put it here. This is how much we'll pay with this strategy. But the tax planning helps you consider, the tax planning supports understanding the liability in your entity type. So I hope I answered that. All right, I said Square reports 20K. Is that standard? Is it like Amazon across the board? It's supposed to be standard. Sometimes like PayPal doesn't. I feel like PayPal is the one that doesn't report consistently. Square, they report. Amex, if you have Amex Merchant Services, they report. Typically those like Visa and MasterCard, like Stripe, they report. PayPal, I feel like they don't report even though they should. I believe the IRS regulation says that if you make $20,000 or more, then those merchant service accounts are supposed to report to the IRS. But I know for sure Square does. I know QuickBooks, if you use QuickBooks invoicing, I know QuickBooks reports to the IRS. And Square and QuickBooks may report under 20K, to be honest. But definitely over 20K, they have a requirement to report. PayPal is the only, the PayPal is confusing, I think on purpose. I don't know what PayPal is doing, and I won't get into my PayPal conspiracy today, but PayPal is the only one that does not consistently report. Okay, I was going to ask what type of businesses? I hope I answered that. If I haven't, can you let me know what type of businesses? You could let me know. Does that mean S Corp, C Corp? Because those are entity types, or do you mean service business, e-commerce business? You have to explain. Okay, I did. S Corp and LLC. Awesome. Right. So we could use a multiple entity strategy, S Corp, LLC, C Corp, not for profit. We could have several entities. And sometimes when we're trying to do strategy, because each entity type has different tax reporting and different tax liability. So within that strategy, it just depends. It really depends, but it kind of depends on what your numbers are. And I will let you know what's best for you. And I will give you an honest assessment of what's best for you. Okay, so back to my little slide deck. So we went over the case study. So I'm super excited to share that with you. I just want to remind you that what you do not know, you cannot grow. So if you have a business, if you don't know your business profits on a monthly basis, how do you know if you're headed in the right direction? If you don't know your monthly expenses, how do you know what money you can spend on contractors and staff? If you don't know your monthly expenses, you're kind of in a phase of unknown. So you're actually always frustrated. You're constantly frustrated with your business because a lot of things you don't know, but the money is the heart of the business. So we must be responsible business owners and start confronting our numbers. Now, I can help you with that because I love counting money. I love seeing business transactions. I love supporting business owners with their business growth. But if you don't know your business financial numbers, how can you evaluate future plans and make business decisions? It's hard when you're not understanding where your money is. It's very hard to plan. And remember the quote from the beginning: fail to plan, plan to fail. I want to remind you, keeping good books and records is essential. This is typically what I see. This is not financial order. I just want to let you know, this is not financial order. Why should you keep good books and records? The IRS says you should. And the IRS says it's actually a regulation. It's a tax law. Everyone in business must keep good books and records. The last thing is, it's just for your own know-how. As a CEO of your business, you need to keep good books and records, because if you get audited, that's like when people have to pay the IRS, they never have good books and records. It's just you're almost asking for an audit. You're asking to get in trouble later. So you just don't want to do it. You want to start having good business practices, and that includes keeping your books and records. Here's an example. Honestly, I'm an old school accountant, so that's my conference table, and this is one of my clients. Because if you're in Chicago, I don't think I want anyone shipping me this stuff. But if you're in Chicago, I take disorder and make it order. So we take all their receipts, classify them by the category. So some for auto, some from events, some for office expense. We sort them by the category, and then we do a spreadsheet. And so then I help the person get order, and then I ask them to get on QuickBooks. I start them off first of the year with a QuickBooks account, because we do not want to have this kind of disorder the entire year. There are some systems. There's QuickBooks Online, there's Expensify, there's a system called TaxBot, there's FreshBooks, and there's Xero. These are some financial management systems that you could utilize to keep financial order. This is a whole slide and a whole webinar in itself, but not only do I do tax strategy, I notice a lot of business owners make a lot of money, but they don't keep any of it. They spend every dollar, make $200,000, $300,000, $400,000, literally $500,000 in a year. And when you look at their bank account, if you made $500,000, I need to see at least $100K in that bank account. Nope. So we need to talk about financial management, but today we're going to keep going. So as a reminder, account is the language of business. You are in business to make money. Profits are everything, and know your numbers, and then add tax. That's what the tax boss lady needs to tell you. This is your tax bill without strategy. Your tax bill without strategy. The IRS get all your money when you don't utilize strategy. So the strategy again was tax deductions, tax credits, shifting income, retirement deductions, and tax elimination strategies. These are the strategies that I could help you implement in your business and help you save thousands in tax dollars, which we noticed that we saw where you saved thousands in tax dollars. That's exactly how I do it. So if you like to save thousands in tax dollars, you can schedule today. Here's my link. It's this link. It's bit.ly/tax boss lady strategy. My tax planning sessions, they start at $9.97. So if you looked at my Calendly, you would see the $9.97, but I'm offering, if you book today, or basically book this week, I'm offering the tax strategy for $497. However, you saw that utilizing the tax strategy, you're going to save way more than that fee. So it's just smart to book the tax strategy session. And hire a good accountant. I'm here for you. Being loyal to the tax professional that does not serve your needs. You don't need to do that. Being able to, on the poll saying that you don't feel like your accountant helps you with strategy and different tactics and expenses to help save you tax dollars, you don't got to stay there. You don't have to stay there. You can come home to where someone can take care of you. And I've been doing this for 20 years, so I know this work. I'm super excited to help and support entrepreneurs and help them not only grow their money, but like I said, save tax dollars. And that's it. And you can follow me on Tax Boss Lady if you're not following me already. I'm going to see if there are any last questions. If there's any last questions I can answer, because you have me here to answer whatever questions. If not, I want to thank you so much for joining me. I appreciate you spending your time with me. And like I said, I can be found at Tax Boss Lady. If any questions come up after the session, you can always inbox me or what's called DM me. I'm old. Or book the strategy session. And that's bit.ly/tax boss lady strategy. Thank you so much. Thank you. Everyone have a blessed evening and stay safe. Thank you. Thank you.